Hello, welcome to the weekly technical analysis review for Monday, October the 29th. I'm Rahul Boyajian, currency analyst at xm.com. The pairs we're going to be looking at for this week are the dollar yen, the euro pound, and the pound dollar. We're going to start first with the dollar yen pair. We can see that the near-term bias is fairly neutral at the moment. RSI is sloping slightly outwards just below the 50 neutral level. We do have strong resistance at around 112.15, which is the 50% Fibonacci retracement of the uplift from 109.77 to 114.54. It's also where the 50-day moving average is currently standing. So if the dollar yen was able to break above that key resistance region, it would shift the short-term bias to a bullish one, and we could see the pair climbing towards 112.70. That's the 38.2% Fibonacci retracement. Just above that 112.88 is the October high for the pair. A break above that high could could extend the gains towards 113.40, which is a 23.6% Fibonacci, and then it would be in a stronger position to make another attempt at that 11 months high of 114.54 that we saw back in September. However, failure to break above that key resistance, immediate resistance region, could see the pair reversing lower and heading towards support at 111.60, around the 61.8% Fibonacci retracement. Just below that, we had that 6-week low of 111.37 on Friday, and then a breach of that support would take the pair towards the 78.6% Fibonacci at 110.80, and below that, the next major support would come from the 200-day moving average at 109.77. Let's now move on to euro pound. Euro pound is fairly bullish in the short term, though we can see that upside momentum has eased over the past day. There is strong resistance at the 50-day moving average, so we saw prices on Friday being capped by that 50-day moving average, and also earlier today as well. We would need to see a break above that 50-day moving average line in order to make the current mini uptrend sustainable and shift the short-term bias to a more convincingly bullish one. Not too far above the 50-day moving average, which is currently hovering around 0.8893, is the 50% Fibonacci retracement of the downlength from 0.9098 to 0.8722. So that's around 0.8910. Climbing above 0.8910, we could see the next resistance coming from 0.8954, the 61.8% Fibonacci, and then further up we have the 78.6% Fibonacci at 0.9017. So a break above 0.9017 would help euro pound head back towards that 11 months high of 0.9098 we saw back in mid-August. To the downside, though, we could easily see a downside reversal if that 50-day moving average resistance holds. We do have at the moment immediate support coming from the 38.2% Fibonacci at 0.8866. A drop below that would shift the bias back to short-term bias to a bearish one, with the next support coming at 0.8811. That's the 23.6% Fibonacci, and a breach of that support would take the pair towards that 4-month low of 0.8722 we saw back earlier in October, and we could see a resumption of that downtrend, and would also help, and that would also shift the current the medium-term outlook, which is at the moment around fairly neutral. It would shift it to a bearish one. And finally, looking at pound dollar, it is very bearish in the near term for the pair. Immediate support coming from just below the 1.28 handle at the 78.6% Fibonacci retracement of the uplift from 1.2661 to 1.3297. If we were to see a break below that support area, and then the pair heads towards that 40-month low of 1.2661 from back in mid-August, that would shift the current neutral medium-term outlook to a bearish one, and then the next support further down would come from 1.2418, which is the 138.2% Fibonacci extension. However, if we have a look at the stochastic oscillators, they are in oversold territory, so perhaps we are due for an upside correction. If that was to take place, we could see resistance coming from just at the 1.29 handle at 61.8%, which is a 61.8% Fibonacci retracement. Further up, there is the 50% Fibonacci at 1.2979. Also, the 50-day moving average at just above 1.30. So if we were to see pound dollar climbing towards 1.30, that would make the current medium-term neutral outlook more sustainable. However, if we were, in order to see the pair returning to a bullish mode, we would really need to see pound dollar climbing back towards that 2.5 months high of 1.3297 that we saw back in September. That's it from me. Thank you very much for watching and have a great day.